Welcome to Life Plus Plus, where we aim to add more value to life by sharing knowledge, life lessons, and combined experiences from our friends, colleagues, and associates. In each episode, we'll be talking about real life issues and things that are important to you. So if there's anything you want us to discuss, leave them in the comment section below or email us at lifeplusplus@thethrowdown.com. Throwdown is THATHROWDOWN. This episode is brought to you by Kososhi Clothing. Welcome to episode 17. I am Lambo the Virus. And don't forget to like and subscribe. On this episode of Life Plus Plus, I have with me Amy, aka the Money Man, popularly known as Imeh Ekpe. How you doing, bro?
I'm doing very well, Lambo. Big intro for a small man like me.
The Money Man.
It seems to be the usual tag now for anyone who comes in here.
Yeah.
You tend to say they're the money man. Thank God I receive.
Amen.
Because if you receive things, things can happen.
Yeah.
But yeah, I'm blessed. How are you doing?
I'm good, man. I'm good. I can't complain. God damn my side now.
If you see that one, go more than your side. We've been privileged to be friends for a while. I always say thank God for the union. A good friend of mine that I grew up with just beside me in Satellite Town introduced us. We grew up in the same area, but we didn't actually meet till we got to England.
Mm-hmm.
But the relationship has been very, very good. There's never been a time I want to pick up my phone and think, I can't call this guy.
Mm-hmm.
Or you picked up your phone, I was thinking, I'm not taking this phone call.
Yeah.
So to me, that's very important to have that kind of relationship with somebody. And I know your kind of your friends and the kind of links you have, but you're special. You're down to earth. You're someone who is very accessible. The information you have inside you and your dreams and aspirations, and to see you not stopping is an inspiration for someone like myself.
Oh, wow. Thank you.
So thank you so much.
That's good to hear, man. They make my head swell now.
Make it no swell, because if I continue, at least I feel use the whole show just to talk about you. So make it no talk. But all being said, something has brought me here today. And it's something which is not because I'm a professional.
Yeah.
It's because of passion. And that's what your platform does. It allows people to deal with real life issues.
Yep, true that.
And that's what I found out by going on there, going on YouTube, looking how many people watch the videos, thinking it's not millions of people. We are reaching out to a small audience. Actually, there's one person we're actually reaching out to. Someone who really needs this information more than you think. So, on watching your show, something crept up in me. And it's something I'm quite passionate about, and something that I was involved in ever so slightly. And then, and this is how I introduced this to you.
Yeah.
It's something that you all understand, but if you're not careful, you can actually hurt yourself. Something that you all understand, you deal with it every day. If you're not careful, someone on the line, something bad could happen to you. And it's more to do with the more simple thing in life, which is called finance. And I do want to state this to everybody. I am not a financial advisor. I'm not an expert. I'm someone who's just passionate about certain information. I have my own experiences, and from these experiences, I want to share them with other people as well. And obviously, it's an awareness as well for people. Excuse me. So, the thing we're looking at today, what I want to discuss is credit scores.
Credit scores.
Yeah, credit score. And
Is that the same thing as a credit rating, have you?
no, exactly, credit score.
Okay.
Now, credit score is a number. That's the truth. It's just it's a scoring system.
Yeah.
Now, the way credit score works, it's a combination of things. And the way the combination works is more to do with debt. And the more you hang around those who are in the banking industry, the more you understand this. But it goes to show from the beginning of time, the way we've actually been brought up. And this goes to do with schooling, for example. So we start by get this information quite young, that, oh, you need to build your credit score once you finish school and you start going into work, and you might get into some financial issues later on. So you start to build a credit score. You don't know why you're building it. You don't know how to build it, but you just be told to do that. Now, what happens is that a lot of people with little or no knowledge are advising you about your credit score. And so you continually do the things that they have done. And so if they're ill advice, you take on the ill advice and you're just going to do your stuff. And for a while, it might work for you, and suddenly it stops working, because the reality is that you don't actually understand your credit score, and then you mention another word, your credit rating. Now, a lot of people comes to one word. The reason why it's one word is really finance is more to do with how well, or credit score is how well you're handling the finance, or how well the finance is handling you. I don't know if that makes sense to you.
Yeah, of course it does.
If you handle the finance very well, that means that you're showing that you can handle debt at a better rate. So you're handling your credit card loans and your personal loans and your car notes and all those other things, or your mortgage, and you're handling that very well. On the second hand, credit score shows that you're not handling it very well because you're having missed payments. And so you're struggling with your payments. So the question is, would you lend more money to somebody who is doing very well financially? Would you?
Would I?
Yes, would you?
Someone who's doing very well financially.
Yes.
Someone who's able to pay back the money I lend him. Yeah, of course.
Yes. And so I guess that's what most people rate as credit rating. You rated somebody as someone who can pay. Then you rate someone downwards because you rated them. It's a big mistake. It's kind of misinformation. Now, the people I'm focused on today, or the person I'm focused on today, is the person who wants to improve their credit rating. It's a score number. You can have it high or low. And even when it's high, you can also not get the best rates, of credit. Because you're not actually showing anybody how you actually pay finance. So yes, you've only got one credit card and that's it. It's not good enough for other lenders to look at you to give you a better rate. So if you're going to understand rating, that's something else. And if you're going to understand credit score, that's something else. Credit score is gained by you doing the right things at the right time, and then certain things will happen. So, for example, the biggest one is paying your bills on time.
What sort of bills are you talking about now? Like the credit card bills, or
anything that
utility bills
take out today to actually on credit. For example, your gas is even on credit. You get credit check for your gas. You get credit check for your electricity. You get credit check for this little things today. It's called soft credit and a hard credit. I will explain that to you later on. But at this stage, with the credit that you get is for every day. So you're going in and you're trying to get credit and you're getting refused, and you're probably getting a lower rating for the wrong reason. One of the worst things a lot of people do, we'll come to that later, is double entries. For example, multiple applications. So you're desperate for a loan, you start hammering application after application after application after application. you're just lowering your credit rating and your credit score because you're showing desperation. There's extra entries onto your credit file which you do not need. You know, so what I'm trying to do today is trying to bring an awareness, first of all.
Yeah.
And that awareness is more to do with your credit score, first of all. If you have a low number, how to improve that number.
Yeah.
And there's a reason why you have to do it. In life, finance is every day. You need finance for everything.
Yep.
So if you don't have that finance, sometimes a little bit extra, you cannot make that investment. Okay?
Yeah.
So another thing is in our community, people use finance for something else. I wouldn't say what it is, but it sounds more like the Yorubas would say, "Owambe." So they'll finance that. Other people who are serious in life, big companies, will use the same finance and get more credit line.
Yeah.
So it's finance is good,
Yeah.
but how you use it. The question is, are you going to continue if you're in a path of doing very good?
Yeah.
Are you probably going to encourage other people
Yeah.
to join you? Because this is what we want in our community, and this is what's lacking in our community. Or if you're someone who's doing badly, are you going to improve? Because there's an opportunity now to improve. And I say this to you because growing up in London as a young man, no dad, no uncle to kind of help me immediately, I chose different options. And one of the options was perhaps to go with some wrong friends. And those friends at that time invited me the wrong way on certain issues. So my credit got ruined. But credit is something that gets fixed. And same again, we'll come to that later on. So the big
How
question,
important is this question is
please ask.
is relevant because this is how people from Niger, most people from Niger think, and it's for obvious reasons. We weren't brought up in a credit-based environment. Everything in Nigeria is either you have money or you don't have money. So they don't build, you're not able to get finances based on a history of your credit, maybe loans or credit cards and so on and so forth. So people who come from that region are not inclined to start thinking about having their credit to be able to survive. So my question is how important is it for you to have a good credit rating or credit score in this region of the world? Is it something that is very important, or can you survive without it?
You cannot survive without credit rating if you want a more balanced future for yourself personally, your family in the future, because you're talking about mortgages.
Yep.
That's finance.
Yeah,
unless
true.
you've got
A bag
money
of cash.
yes, which a lot of people don't. If you need a brand new car to be efficient, the government has got so many things, for example, in place now, and people are looking to change their cars. You need to finance those. If you want to make an investment, you see a decent property.
Yeah.
You want to make, you don't have cash available. The system here allows you to make all this possible by having access to cash, just by proving that you are able to manage the finance better. So the credit score comes about you doing certain things.
Yeah.
So number one, for example, the most critical one is to be registered on a voters list. The reason why is that
That's the electoral role.
electoral. Who is taking the money from the bank? The bank wants to know, where do you stay? That's sorted. They know exactly where you live. So being on the electoral roll is important. And so obviously it shows that you also contribute to society. They know where you are. That's part of it's other little things the bank look at for. Okay, how much money are you making? They can see this because there's something called reporting. This is a big thing that a lot of people don't know. This is why people also fill in the credit checks and also trying to improve their credit score. Reporting happens by your finance companies or which you've taken finance with.
Yeah.
And this is what happens. They have to report to the agencies, the credit agencies who actually have your records. As we know, there's Equifax,
Yep.
there's Experian.
Yep.
The other ones out there.
Yeah, but those
today,
are the
those
big
are
ones.
two big ones.
Yeah.
They report to them, and what they do is they have all this information on file. To a certain degree, this information are correct and incorrect.
How do you mean?
There's wrong entries that happens a lot. There's wrong searches that happens in your name by big companies, which it should be what we call a soft search. For example, if you're getting a credit card, that's called a hard search. And that affects your credit a little bit because you're searching for a product. So it's because of hard search. If you get it in car insurance, it's a soft search. They want to search that you're in the right address, the individual they're dealing with, and you're going to be able to afford the insurance as well.
Yeah.
So you get what's called a soft search and a hard search. So the hard search is what affects your credit more than the soft search.
Got you.
Okay? So where the searches are coming in, you need to be careful. That's why we say people, you got to stop applying for credit. That's the most dangerous one. To actually stop applying for something you don't need. You will not believe it that a lot of times you probably need to make application as an adult, maybe about 12 to 15 times your entire life.
Wow.
If you're managing your finances properly, your credit will be A1. Because you don't need, think about it, what do you need money for? If you're working, you're earning, because that's the biggest thing the bank looks at. The bank is trying to get what you've made. They're not trying to get what they've given you as a loan. So don't think you're rich when you've got all this debt. You're not rich. You're just good at managing the bank's money. And they'll come for it if you don't keep up the payments. And that's why they have it written in small letters. If you don't keep up the repayments, we will come for our property. So you're just managing the money. But when you have your own wealth, which is something else, we're not talking about that. We're not discussing that part of finance. We're talking about the credit score. When you have that side to your category, you become a different customer to the bank.
Yep. I know this.
But most people are really at the mercies of the bank. That's the truth. So not understanding your credit report, for example, is a big problem. And this is why you asked me that question, which is still in from the way you asked me. If you come over here, do you need? You need. You need. You need to get with. That's why I said when you go to
Even
Rome,
if you don't need the money.
you have to. You have to be. How are you going to open a bank account?
If you don't
More
have
basic bank account.
Yeah.
You don't need a very good credit, but that's what starts it off. Now, this is what really, this is where the game changes. If you already have a bank account and you don't want to increase your credit rating and you're having your wages going on a regular basis, the bank will offer you money. The banks rate you more than your credit rating. This is what I was trying to say to you earlier on. Your banks are the one who rate you because they're looking at what you're doing, your activity. They're saying, I like what this guy's doing. I like the way the money's, I like how much money is coming in. I like the way he's conducting the activities. He's not overdraft. Everything is going smoothly. When I was saying smoothly, all your direct debits, all your transfers, you are in black, you're not in red. So they're quite excited about that. They start to offer you products one by one. That's how we all get into debt. That's how we get into debt slowly, because we get offered these products one by one. So it's a slow process, and you cannot avoid it. But understanding it now is a different thing. So really, my next kind of area of kind of discussion with people, or what I want to focus on, I've got about 10 things I want to bring up with people. What I would suggest for you at this time is to get a pen. We're going to be more structured in terms of the information we're giving you from here on. And it's more to follow that structure that would give people that final thing.
Nice.
You know.
And so what are these things? And
to be honest with you, they're simple things. They're the most trivial things. And number one, believe it or not, get your credit file in front of you. You need to get your credit file from all three agencies, the three main agencies.
yeah, like
get
the
those
Equifax, Experian, those are the ones you're talking about.
Yes,
Okay.
you need to get that. You need to. There are other ones out there. As I said, we're not professionals, so you need to do some research yourself.
Yeah.
This is not about giving you stuff. We're giving you nuggets.
Yeah. It's not set in stone.
It's not set in
Yeah.
stone. So you go out there, you get this information.
Okay.
Now, when you get this information, what you need to do now is go through it line by line. This is the thing now. Every line means a lot to you because that's what you're being judged on. If your name is spelled incorrectly, you have to correct it. Your date of birth, every bit of information has to be correct. If you feel it's not correct, believe it or not, you can actually contact the agency and they can correct it, or you can go back to the lender to correct some of this information. This is quite critical. So we keep on doing applications and you're thinking, oh, you're playing smart guy.
Yeah.
Smart guy does not work in this situation. Finance is very, you deal with computers.
Yeah.
It's not, they recognize numbers. So if the numbers don't match,
Then it's a totally separate person.
thank you. And that's where your credit score gets messed up. Your credit, for example, you could have fantastic credit score, and you're about to go apply for something which is a bit more up in the thing, which is called a hard, for example, a mortgage.
Yeah.
You get turned down, only to find that maybe you register, there's one card or something which you've forgotten about, thrown away, registered in a different address. It's still showing on your credit file. So you need to be careful that you actually go through the file. And that's why you need to, first of all, call the file down. The file is the most important thing.
Okay.
Once you've called the file down, then the whole work can start.
Okay. So the first thing is to get your credit file.
First things first, get your credit
At
file.
least so you know where you're starting from.
You know where you're starting from.
Okay.
You can, as I said, argue about it, debate, and stuff. Now, this is not very important, but I need to mention this early. Do not panic if you see all kind of stuff from 10 years ago, don't panic. 6 years ago, don't panic. Most banks are more concerned with what you currently are operating. So if you've defaulted 10 years ago, don't start paying that now. If you start paying that now, then it becomes a new default. Brand new default that.
No, wow.
So don't worry about that. What you need to focus on are the ones within the last 6 months to 12 months. Those are the ones you need to put your energy into. Okay? All the other ones, if you're going to look at them, then you need to consider, as I said, they become brand new dates. This thing registers by dates. So another thing is credit reporting. Your bank reports your overdrafts, your credit cards, balances, or anybody who you deal with in finance reports at a certain date to this company.
Yeah.
A lot of us clear our balances either after they've reported, so it's not reflective. So you need to find out from your credit card companies and your bank, when do you report to Equifax and Experian? It's not your balance at the end of the month that matters. It's when they're reporting. So, for example, if they're reporting your account on the 12th, but every 13th you're in zero. What they report is on the 12th, not the 13th. So you need to know when they report it, so that you can be ahead, so that the reporting is showing better.
Okay, so get your credit file. Know your credit report.
The next one is also a small one, but also an important one as well, is also to have an idea when your credit card bills are due. Please don't miss payments. Missing payments is a no-no for bills, because it gets reported. As I said to you, everything within the last 6 months. So every time you have a default, it creates all the hard work you've done just gets pulled back. Everything that you've done gets pulled back. So it's better for you, and this way we go to cash flow, because we're not talking about cash flow. We're not talking about that today. We're talking about credit score. So we're not going to discuss cash flow. Hence, you need to get your cash flow better. Because every time you miss a payment, it shows up and then it's used against you. And so that's why I said to you, when you get your credit file, when you look at your credit file, and I said to you, the things like reporting is what's the activity that's going on your credit card, on your credit file. So reporting it affects you in a certain way. So you need to make sure that you're in line, so that when it gets reported, you're in line. It's not need to fall out of line all the time. And a lot of people don't know this information. Now, I need to say this to people. All this information I'm trying to give you at the speed of light is on the internet, on various platforms, YouTube and all the other platforms. So they have access to it.
And there are lots of professionals.
There's lots of professionals out there. And this information, you need to take on bit by bit. That's all I can say. You have to have a passion for your own personal life more than anyone does. And this is how I can best explain it to myself. The banks have numbers on me. The bank have numbers on me, and I don't know those numbers. And I don't like the idea that I don't know those numbers. But the bank has got numbers on me. So
credit report.
Yes, in?
Your file. So your file, get your credit file, get your report. Don't miss a payment.
And this one is very interesting. Credit utilization. I like the expression in your face.
Credit utilization.
Yes.
Or how you use the credit.
Yes. Very, very simple. There is a rule for everything. And actually, the rule is the 80-20 rule. In order for you to be respected in the credit wall, in this so-called invisible credit wall, you really need to be using only 20% of what you actually borrow.
Only 20%?
Yes. That's why other lenders would touch you, because now they believe that the money does not excite you. Money is meant to be used in a way that you're not excited, but for specific purposes. Hence, I mentioned that in life, you probably make about 12 applications altogether. And if you make 12 applications altogether, none of it would be refused, because you would have very good credit. Because you would have paid all your bills on time, you're using the finances you're supposed to be using for yourself, and then you only apply when you need to. For example, college, something serious, something that you're making, you want to buy another property. There's certain things that you must do in life. You're moved up, or you've got a bigger family now, and you want to help. Even like a friend I showed up in his house the other day, he just helped his daughter to buy a property. He's not much older than I am. Don't give away my age.
Yeah.
He's just bought a property for his daughter. There are things that you would need finance for. So it's good to have that. So apparently it's a 20% utilization.
Okay.
So if you have a credit card and let's just say it's only £100 on a credit card,
£20.
you only need to spend £20. So when a lot of people borrow money and they're throwing this I'm bare.
And they just go
and they're maxed out on credit cards, and then they find themselves in the revolving door, and the revolving door is a rule 72, and that's one of the worst things that can happen to you. Rule 72 is just the worst thing that can happen to you. Basically, it's the interest rate on the money divided by 72. That's how long it would take you to pay back.
Madness.
That's how long it would take you to pay back the interest on a credit card. When you understand those rules, it will scare you to ever get a credit card.
Wow.
And so you have these people who are going in excess, and then they try and borrow the next one. Your utilization is dropping your credit score as well. So hence you need to keep it at a good level.
Okay. So you've got the report, the filing, the report, the don't miss payments. Then your credit utilization.
The credit utilization, that's very, very important. Obviously the electoral
Roll as well. That's the first step.
First step.
Okay.
First step. Now, another one is to fix the mistakes. There are mistakes that are being made on your credit file consistently by either lenders or even Equifax or Experian themselves. It's the way the entry is done. So hence we recommend that you get your credit file, you look at it in detail. You can actually write to the company, as I said, that's Equifax or Experian, or the actual finance company for correction. These things are, I don't know, it's like a quick text message. And you do this, you might have to chase it up.
Okay.
The reality about finance is that you have to spend some time on your finance. This is the only thing that you don't go to school for, but it will cost you.
It affects your life big time.
It costs you from student loan. Because as we all know, borrowing money is a stealer. It steals from your wages. It steals from your future. It steals from the things that you could be investing in, you know. But also, when you pay off, you also have a settled mind, because sometimes you needed that loan for a specific purpose. For example, if you need to go to school, yes, you've qualified, you've gotten your education out of the way. The next big step is to get a job. You know, when you've got a job, you work hard and you hope that your job has got a lot of value and you could pay back the loan quicker. Some people are stuck with a loan for 10 years. And if you've got a certain quality of job, you could pay back in 2 to 3 years. It depends on the quality of work you have as well. But it's a relief on anyone who pays back all his debt. Anyone who's ever paid back the debt, to feel free, it's a feeling that goes beyond the norm. You know. So I encourage people to pay off their debt as well. It's not for your credit rating, for your peace of mind at night when you're sleeping. Yes, we all know that one. We've all been there. The reality of it.
Okay, so you start with the electoral roll, your credit file, your credit report, don't miss payments, and your credit utilization.
Your credit utilization. Okay. Another one is bills. This is a different kind of bill. You see all those bills that you think that don't matter? All those ones you think that don't matter, they're the ones that are affecting you the most these days.
Like which ones?
Your telephone bill. That little handset you've got is costing you your credit now, because this is now linked to your life. It's your activity. It shows what you do. So you have people who are buying the latest phones, as we know in the UK here.
Yeah.
It's contracted.
Yep.
So you got a bill of £70, £80 a month. Meanwhile, you have no life insurance. You don't have anything for your life, but you've got that phone. Now, by not paying that bill, what happens is your credit gets affected. Or by missing payment, your credit gets affected.
Yeah.
Your electric, you think, oh, I'll pay that. I'll go have a drink tonight. I'll pay that next week. Your credit's getting affected. So this is the most silly things not to pay.
Yeah, that can actually
affect your credit now.
So with a good way of getting out of this or to facilitate you in the right direction, would that be to set up direct debits for the most important payments? This is given you have
Lambo. This is like the first thing we should have said. Your disposable income is after your expenses, taken away from your income. Your disposable, what you can spare.
Yeah.
People are mixing up the disposable and their bill money together, and at the end of the month they go, I've got £2,000 in my account. No, you don't have £2,000. You don't.
That's true.
You've got bills. They're guaranteed. You've got some variables, like, for example, your car gives you a challenge. It's variable. There's so many variables. Then you talk about spare money.
Yeah.
So it's a distance away, and if you're not buffering enough, and this is excluding your investments, your kids' money for university, if you want to go to private school.
Yeah.
We're not even talking about these things yet. We're still talking credit score here.
Yeah.
Just understanding the basics. Because once you understand all these basics, you will become more interested in the rest of your finance. This is the whole idea. Okay. The whole idea is that the reason why we're starting with here, which is the credit scores, when you understand what's happening on your credit file, what you're paying, what you're dealing with financially,
you'll be more informed.
You'll be more informed because, for example, most people who want to check their credit file is because they want a mortgage eventually. Yeah. More people, like even you come from abroad, like you asked me, want to buy their own property in this country. Yeah. If you want to buy it the mortgage way, you will need your credit file. So all these things are they all contribute towards your credit file. Okay.
So the first thing is electoral roll.
Yep.
Second one is know your disposable income.
Know your disposable income.
Have your credit file.
Yep.
The credit report as well.
Yep.
Don't miss a payment.
Don't miss a payment.
Then the utilization, which is the 80-20.
Yeah, 80-20 rule, which is just to reduce, just to show to the bank that you're actually spending this money they're giving you, but also you're also paying it back. Mm-hmm. Yeah. The credit score is a risk system. After risk assessing you, we score that he's going to be good or bad. So if you're good and discipline, and in our community, one of the biggest struggle is, as you said, not coming from this. So a lot of our people have thought, grab it, run away with it, and I would never pay it back. Unfortunately, 25 years down the line, when you really, really need a home for your family, when you really settle down, when you're, when things are the time you need it, you don't have the credit. Because you had no idea, or you just spent all time, you killed it. Yeah. As they say, you killed it. You cannot get a mortgage with a poor credit. The bank would be putting its whole investment and the time of everyone's work at risk if you've got a poor credit. Even if you have the cash, but you've proven to them that you have a poor payment system.
Okay, so after the 80-20 now,
Yes.
what would the next thing be?
The next thing would be very, very important. Stop making applications. Make applications that are relevant at the right time. And what that does is it stops what is called a double entry. Like I mentioned earlier on, entries onto your account. That affects your credit. So you're applying for a loan, but you're trying A, B, C, D, A. No. You're showing desperation. So you need to stop applying and wait till the time is better for you. The credit could take up to 5 years to build. Up to 5 years. Sometimes up to 2 years. Depends on a couple of things you do. But there's some immediate things you must do. Like I said, we've mentioned a few of them. Anyone who is smart will go online, do a bit more research, because this is their life. This is not my life. Exactly. It's not your life. Yeah. This is their life. And this is why me coming on here was so paramount. It's about real life issues.
Yep.
Now, what am I going to do to change my life? That's the question. Now, I could tell you something that upon speaking to you about coming on to your show, you said something to me. And you said one thing to me. You said, we could learn a lot from this. We would learn a lot. I've spent the entire 3 weeks that I've spoken to you investigating, making checks and speaking to friends and asking questions and doing surveys and challenging people and asking people questions. And goodness me, my phone is buzzing with fans. You know how the phone works? You check too many things, you talk about it too many times, your phone starts ringing with it. Yeah. That's what's happened to my phone. So it's given even I personally an additional reason to do this for myself. Yeah. And I guess when you probably leave here today, you probably do the same as well. The one thing I would encourage everybody to do, and I could not do this enough, I could not encourage you, get your credit file. Get your credit file.
You have to know what you're dealing with. Yeah. How bad it is or how good it is.
It doesn't matter.
Yeah. You need to know.
I always say this to people. There is no such thing as how good or bad it is. I need to know some facts.
Yeah, true.
Facts is facts.
Yeah, true.
Whether it's good or bad. Once I get the facts, I can then make it this. Yeah. I can then do this. There are people with... This credit issue is very funny. There are people with very good credit, with Experian, with Equifax, they're fair. There are people who are very good on Equifax. It depends on what you're doing, how you're managing, and how your payments are working. Yeah. How the reporting is working. If you're taking care of all debts, or you're managing what you currently have in a correct way. Yeah. All these things are all little things. Okay. But as I said, you need to go out there personally. I couldn't encourage everybody to first of all get that report in front of you. Line by line, you're crossing it out. The day you start to do that, you will see your finance change.
That's nice. That's good. Then a lot of people will be breathing a sigh of relief now.
Man, the sigh of relief comes from
being debt free.
Yeah. And knowing what you really have. Because one of the worst fears is the fear of the unknown. The fear of nothing.
Yeah, that's so.
You just sit down for here, you just form fake thing for your head, then you'll begin fear. Once you don't fear finish, you'll carry that fear everywhere where they go, and you know if you'll overcome the fear. So the reality is stop dilly-dally, because your finance does not recognize fear. Your finance number. It just it's a numbers game. So the more you yourself know what to do for the number, the better it's for you. Okay. And I said, information is too much out there.
Yeah,
it's too much.
Of course.
It's too much.
So The first one is electoral roll.
Yes, sir.
Second one is know your disposable income.
You're a good student.
Your correct.
You're a good student, I must
The
say.
third one is your reports. You have
Yes.
your reports.
Yes.
The fourth is the file.
Yes.
The fifth is make sure you don't miss a payment.
Yeah.
The sixth is the utilization, the 80-20.
Yes.
And the seventh is stop asking, stop making applications.
Stop it. Stop
Okay.
it. Stop it. I think I'll just run up with this last two so that everything will make sense and you yourself can go and change your life. It's not what we say here today
Yeah, of course.
for your life. It's what you want to do to change your life.
Yeah.
We're here to facilitate. We're here to think. Your next show is going to be more interesting. I'll tell you why.
This is us.
Yes.
Why do you say that? You think this is interesting?
The next show is more interesting because this show came about me watching a previous show that could make the show. If you know what I mean.
Okay, I get what you
So
mean.
the next one,
Yeah.
there's someone who is passionate
Yes.
about some information that also needs to get it out. As you can tell, I'm not the most professional person. I'm not trying to be professional.
Neither am I.
But it's when you have something inside
Yeah.
you want people to get it.
Yeah.
And so that's why I say the next show, that's what you also say your shows are powerful because it's not moving with specifics, it's moving with the
dynamic.
Dynamic. And the people are looking, thinking, I know what this needs next. I think I could see a mix of things coming in here. So that's where this is interesting.
Okay.
So two more very, very interesting things. Very simple. Everything here I'm telling you is simple, easy to do. Like I said, pay your bill on time. Eligibility checker. This one's a funny one. Do not apply for finance if you don't need to. And also, if you want to check if your credit is moving in the right direction, if it's possible to get things, there's a checker to check beforehand so that it goes out there and it makes a multiple application on your behalf
Without affecting your credit.
without affecting your credit.
Wow.
That's the difference between you making a hard, that's why I said to you, I'll come to this later, hard and soft. The hard ones are, as I said to you already, loans, credit cards. Those are hard ones. Soft ones are
Insurance.
your insurance, little things like that. They will check on you. Utilities, they will check on you, those kind of things. Okay? So what that does is it minimizes how your credit file is. Because each entry is actually, it's almost like I said, a credit check affects your thing. So you don't want to be seen to be doing that again and again and again. And also the funniest one is, listen to this. How can you on the same week be looking for a mortgage? In that same week, you're applying for a loan. In that same week, you're applying for a credit card. In that same week, you're applying for more things.
Maybe in birthday.
Okay, sharp guy birthday, yeah? Okay. So you can see how this thing is working. You cannot play with the system. There are people who do this fraudulently, who think they're so smart, but in real life, when you check them out, they themselves do not have a good credit. They are writing other people's credit.
Yeah.
And so this is the thing I want to say to people, which is the last thing to say to you. Keep an eye on your credit file, just in case you're doing very well in life and somebody wants to steal your hard work.
So stealing identity. Wow.
It's a big deal, and it's a big deal, especially worse for older folks. And then we know in the society that people are vulnerable as they get older.
Yeah.
But also our folks, we're getting older, we're also getting more vulnerable as well. And so, and the system right now, the way that it goes about is happening very quickly.
Yeah.
So you need to keep an eye on your credit file. It's so paramount you do that. Once a year, twice a year, you do that. Personally, I have my own system in my phone, which I use to check my credit. It's quite accurate. My credit is not great. It's improving all the time. I've had my ups and downs like anyone else in finance, but right now I'm on the up.
That's good.
And the reason why that's why I think I got more passionate to do this, because I could see it coming from a low I could see it come from a very good place in the first place, going down, and now going back up, you know. You have to have some kind of, in conclusion to this, you have to have some kind of loyalty to the finance world.
What do you mean?
Drink up, because this is the best bit. 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 You have to have some loyalty to the finance industry and to the banks and to everyone else. You see, a lot of us want to be rich, but we're despising rich people. We despise what they do to become rich, or to even be stable, not even rich. So what is the use of us doing all of this when they have all the information and you don't? One of the things that people don't have is a loyalty to a bank, and you need to start this by letting your money go to them and start cutting away 15 other banks that you have. All this thing we're talking about, reporting. By the time you call your 15 banks to find out what time they all report, you can't cope. I know, it sounds strange, isn't it?
No, it actually makes sense. It makes sense.
So guess who gives you your biggest credit rating?
Your bank.
I know we have to wait to the end to get to this, but this is what happens. It's not the credit rating that you said. It's not the credit score. It's actually your bank. Because your bank can see the path which you're taking, and they will continue to honor you. When they honor you, they would work with you even where you've messed up. Because they can see your path now, they would help you change things. So loyalty to also your bank is important. If you've messed up, in the UK, you have plenty of opportunity. In a way, you can go to another bank. Go and start again, but show some loyalty. Stop running from one bank to another. Stop having 15 accounts. You know, when you get your credit report and you look at it, you have to really understand what I'm talking about. Everyone needs to, and that's what changes people's lives.
Wow.
You know.
Man.
Yes.
This is like some nuggets you've brought here now. So in conclusion now, the first one was the electoral roll.
Please, that is most critical.
Yep, you have to have it. Then you have to your disposable income. You have to check your disposable income.
No, sorry. Let me correct that a bit. Second, let's get an electoral roll.
Okay.
Let's get an electoral roll. Yeah,
Yep.
we'll give it that. Get your credit file.
Credit file.
Because you need to see now what's on the credit file.
Yep. Then your credit report.
Yes.
Then don't miss your payments.
Don't stop.
Utilize your credit, the 80-20 rule.
Yep. Reduce the amount of money you want to cash out as much as you want to.
Yeah.
And sometimes use the little trick. I did not mention this. You can pay twice a month. You can pay twice a month.
That's another good one.
Because of the reporting system.
Yeah.
It can show that you are ahead.
Okay.
You're aware.
Okay.
So which is good.
Okay.
You can.
So that's the 80-20 rule.
Yes.
Then stop applying for more credit cards.
You don't need to.
The other one you said, I think, was about the eligibility checker.
Yes.
So you use that if you're before applying for anything.
Yes. If you use that, it reduces the amount of hard entries. I think that's the biggest one for people. Not understanding the entries. It's a hard entry. It's almost like as if you actually taken out the loan. Even if you haven't.
Wow, that's mad.
Yes.
That's
so
mad.
yeah.
So the eligibility checker.
Yeah.
Then you also mentioned about protecting your identity. So that still goes back to the credit.
It still goes back to your credit, because if your information has been stolen and has been used by somebody else, then all your application will get rejected. So even if you do what you do, you go into a vicious circle where you're never getting credit because all your information is wrong. And please, the idea that you have poor credit and your identity cannot be stolen, get it out of your head. I found a £25,000 loan in my name from a bank that I haven't dealt with.
Wow.
And so, do not. And
Were you able to resolve it?
Yes, I've resolved it, and I'm always going back in. So my credit file is like once a week. For me, if not twice a week.
Okay.
It's different risk for different people.
Yeah.
So you go check it and stuff. But there's also other checkers you use that don't actually intrude into your thing. I check to see, for example, when I applied for an overdraft, it went through. I kept checking to see when it was getting reported.
Yeah.
I kept checking to see.
Okay.
So I have an idea for when my bank reports it.
Yeah. Okay.
It's interesting, but
you
have to keep an eye on these things.
Okay. And the last one was loyalty. Your loyalty to a bank. So
Loyalty is everything.
Yeah.
Loyalty to friends.
Yeah.
The reason why I'm here today with you is part of loyalty. It's part of it. You have to. But for finance, you really, especially on the average guy, you must start to show that yes, all my wages comes to you. I'm spending it in a certain way, because what is that you're a computer person, so you know this thing what I do. All these things are number games. You're not in the game. You're not playing the game. And if you are playing the game, you win. If you're not, you're out. Yeah.
wow, man. Thanks a lot for coming, man, and
No
thanks for
problem.
the knowledge.
No problem.
And as you said, anyone who wants some more information, there's loads of information out there. Just make sure you seek the right information and set yourself free from this monster of these debts.
It is a monster.
Yeah, but
It is a monster.
so see you guys next week.
Okay.
Peace.